You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's blog gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/blogs today to sign up for regular updates via email. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That rockin' tune means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. Quite a few programs for you guys to choose from. So if you've had your fill of Volatility Views, it's only once a week after all. We got 14 other programs for you to fill up the rest of your week with. Option Block, The Advisors, Option, Trading Tech Talk, you name it, it goes on. TWIFO, I even forgot about TWIFO. So many there for you guys to enjoy. The easiest place to get all of them, of course, is the mothership, the flagship, theoptionsinsider.com. Or head on over to iTunes and just type in Options Insider Radio Network, and you'll get the full kit and caboodle. Just upgrade your subscription to that. Again, it's all free, so what does it matter to you? Just upgrade, and you'll be awash in options content. Of course, while you're there, if you're in iTunes, wherever your platform is, if you feel so inclined, you're moved by the spirit to leave us a review, have at it. We welcome those as well. And of course, a little bonus for you hardcores out there, you can always join us live every Friday, noon Central, 1 p.m. Eastern, via Mixlr, Mixlr. You can grab that link via our social media or follow us on Mixlr. And once you're there, once you have that link, you can set it and forget it. It's the same every week, and you can join us when you're available. However you listen live after the fact, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We do love to hear from you guys. And joining me, I'm pleased to say, in studio today, we have usually the man beaming in from his corner office, and someday, many, many years from now, several decades, he will be referred to as Dr. VIX. Until that time, we'll call him Russell Rhodes, the man about town over there at the CBOE, man of many hats. Mr. Rhodes, welcome back to the show, and welcome back to the studio.
I just love being here in person. It's a nice, crisp fall day on the first day of September. What a wonderful day to stroll across the loop.
It's my warm personal magnetism that brings you in all the time. Is that not what it is, sir?
That and it's always nice to see Gene.
Yes, and we're pleased to have a live studio audience here as well, joining us in the show. So that's always fun for a little bit of a break. And joining us, I believe, from right down the street, he could not be bothered to. He's not as drawn by my personal magnetism, Mr. Rhodes. We are drawn by the greasy meatball himself, Mr. Mark Sebastian from OptionPit.com, by way of a little thing called Carmen Line. Mr. Meatball, welcome back to the program, sir.
Hey, good to be here. Great day, lovely fall morning. Even though it's not technically fall and it's still technically summer.
I'll say you guys are jumping the gun a bit. I'm still in August mode.
It's a meteorological fall. It is not the technical fall, I believe, is the way they describe it. But beautiful day. Looking forward to a beautiful long weekend to enjoy our day of no labor on Monday. And I'm sorry I'm not there in person. there's nothing I like more than a live studio audience, so it would have been fun to record there.
Yeah, well, let's get the vol party started anyway. We can do it remotely with you, Mr. Meatball. Let's kick off the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, that music means it's time for the Vol Review. Of course, the portion of the show where we break down the week that was, and indeed, in this case, still is, from a volatility trading and trending and what have you perspective. We are recording this and streaming it live right around noon central here. So right around pretty much halfway through the trading session here. And as we're getting into the second half of the day, listeners, the old VIX Cash taking it on the chin a little bit as we saw the first reports here. First big number of the month coming out this morning, non-farms, not really budging the market. A whole bunch. S&P up slightly on the day. Dow up a little bit more, up nearly 0.5%. NASDAQ can't figure out what the heck it's doing. It's pretty much unched on the day right now. And, of course, that news coming out of the market on the heels of the encroaching holiday weekend means, you guessed it, vol coming in about half a handle out there in VIX Cash land right now, hovering just north of the 10 handle, which means we're flirting, listeners. We're flirting once again with single digits. Oh, how things have changed from a few weeks ago where I believe it was your cohort, Kevin, Mr. Rhodes, who was predicting an 18 and a half VIX. Here we are now flirting once again with single digits. So if we do break through, I didn't notice. Have you broken through today yet, Mr. Where I haven't had a chance to look, but if we do break through today, that means our poll from a few weeks ago where everyone was buying 20 versus 10 before single digits, they were all pretty much wrong. So we'll see. We're flirting with it. We're getting close, listeners. Maybe we'll cross that threshold intra-show here, so stay tuned for that. Other than that, Mr. Rose, a lot of things popping off this week, even though a slightly quieter week than last week. Still had a one day over 1 million contracts out there to spoil a little bit of the VIX options rundown. But that said, what's catching your eye out there this week?
Catching my eye, it really, and you kind of stole the thunder here, but the VIX pressing towards single digits, I'm almost certain that I said about this time last week, minus a few minutes, that we probably wouldn't see a single digit VIX again this year. That's about all it takes.
I told you that was the turning point for you.
I know.
I did warn you, but you have been known to shall we say, prognosticate on the north side as opposed to the south side for all things VIX. That said, anything else catching your eye this week, Mr. Rhodes?
No, it just Skew's actually backed off a little bit. It had been indicating that people were worried about their tail risk, and typically when we get VIX at low levels like this, you start to see Skew putting up a 140 or so, and I don't think we've returned to those levels this week. It's interesting to see VIX come down, but also out of the money put implied volatility come down as well.
Yeah, Skew index pretty much unched from last week. It was right around like 130 when we were doing the show last week, and it's pretty much right exactly at 130 again today. Of course, Skew index, a little bit of a lagging indicator. Of course, listeners, doesn't come out instantaneously. It comes out pretty much once a day, so it's one of those types of indicators. But that said, as of now, it's still pretty much right around unched from where it was last year. Mr. Meatball, I know it's a quest of yours to someday get Skew Index put out, if not real time, at least every 20 minutes or so. That aside, what else has been catching your eye out there in the vol land this week, sir?
Well, it was a really weird week. We had on Tuesday, and we talked about this in Option Block yesterday, just a day where it looked like the market really wanted to have the wheels fall off. But seems like North Korea's half-life is getting smaller and smaller, and there is less fear about that. There's less fear about Trump. It's all about tax reform, and markets just seem to be impervious to kind of anything right now. The one thing that is kind of disconcerting is that, we've got a low VIX. Now, we're going into a long weekend, right? So when we come in on Monday, where will all things being equal, when we come in on Monday, where is the VIX going to be? About 11, right? That's not about right, Russell?
Very possible.
Yeah, but even if let's just move the VIX back to 11, the September future is over 12.5 right now. That is on Monday. There will be on Tuesday, excuse me, there will be about 2 weeks to expiry and a 1.5 point spread. Right now, a 2.5 point spread. That is just crazy wide. And we have seen that typically the VIX futures are right and the cash index is wrong. So there may be another couple of hurdles. Maybe they're looking forward to some fireworks with the debt ceiling. Although it sounds like Hurricane Harvey maybe took care of some of that.
Tapering.
But we also have the Fed. Could be the Fed. But there's definitely a underlying bid in the VIX futures that is extremely stiff. That's also something that we have historically seen when we've seen multiple VIX pops in a row. The VIX futures don't quite get over these things as quickly as the VIX.
Mr. Rhodes, do you concur, sir?
I wholeheartedly concur.
There you go. The enthusiasm.
A man of few words.
The enthusiasm dripping off you. Before we move off your stuff, you mentioned, Mark, the futures are a little bit wonky. It was about a 2 point gap between the front month and the cash coming into the non-farms last night. About 3 points out there in 2 months out. That has obviously mitigated a little bit post non-farms, kind of what you expect. Before we get to some other things, including your weekly rundown, Mr. Rhodes, I hear you're working up, you're cooking up over there in the CBOE labs. Some interesting research, as our British friends might say. Anything you want to share with our listeners at the moment, sir?
Well, first off, I do condolences to Mark Sebastian and the whole Villanova family.
Oh, thank you.
You're welcome.
We're very sorry. We're very sad about Raleigh.
And keep in mind, in '85, Raleigh rolled over Memphis in the semifinals, which we don't ever really get much excitement in Memphis. And even though he ruined it, I had nothing but respect for the man. On the research,
best dressed man in college
basketball.
basketball.
Sad about Raleigh Massimino, former. For those of you who don't know, he was the head coach of the '85 Villanova team.
Which Mark was the ball boy for, correct?
Yeah. Well, Russell, here's an interesting thing. You know what the last Catholic institution was to win a NCAA championship? It was Villanova in 2016. You know what the previous Catholic institution to win the NCAAs was?
Loyola Chicago.
Villanova in 1985. Loyola was the previous to that then. So there you have it. Shockingly, DePaul's never won an NCAA. And
I'm not shocked. The only school from Illinois back in the day. The only Illinois school to ever win one is Loyola.
Mm-hmm.
So
which is crazy when you consider how many basketball players are in Illinois. But one thing, Russell, I did want to just moving back to what we actually do here. I read through your leveraged RVX piece.
The leveraged
RVX. It was great.
Well, thank you.
It was great. I'll let you talk about it. But folks, if you did not see Russell's tweet and you didn't read that white paper, give yourself a half an hour and give it a read.
It's a weekend read for Labor Day.
Mm-hmm.
No, my intern was taken away from me prematurely.
Oh, no.
I know. And we had to get that thing out very, very, very quickly so that she could have a resume builder. But it's very similar to papers that you and I have worked on. It's just applying leverage to the put right. You can, and I guess I'll just go ahead and give away the ending.
You said this is on RVX, correct?
No, it's actually the put right using RUT options.
Oh, right, okay.
Which has underperformed a little bit. Buy and hold total return for the Russell 2000, but you can leverage it up and still have leverage it up 140%. Still have lower volatility than holding the Russell 2000, which we all know is a very volatile index, and outperform by about 3.5% over time.
Yeah, and you also had. I think the key is, maybe there's a small underperformance in PUTR, or even and huge outperformance on the 140 levered, but PUTR has 1/3 less volatility than the Russell 2000.
Yeah,
that's phenomenal.
Yeah, it smooths things out tremendously, and part of it's we talk when we do talk about RVX. we always note that it's much higher than VIX. And it's that overpricing, I think, that smooths things out because you generally take in more premium. And for those of you that don't want to try to do a Russell 2000 put right on your own on a regular basis, sooner rather than later, there should be an ETF that will give you that ability.
Yeah, and there's going to be a little bird told me, and by little bird I mean myself telling myself, I'm personally planning on working on a fund that uses this as kind of a basis and then has some VIX hedging characteristics over the top of it to really fill in some of the dips. That'll be some product that we come out with later next year. So at Carmen Line, we're going to have, we've got our flagship vol fund. Next piece, we're going to have an S&P option writing fund that has a VIX overlay over the top of it. And then the third one I want to do is a put right that has that overlay over the top of it. So we're going to have all sorts of fun product here at Carmen Line. So just an FYI, you've inspired me to do all sorts of great things, Russell.
He was just saying he inspired himself, sir, to inspired you, I should say, to do a little more research over there.
Okay.
No, I do.
All
I
right.
just still love a salad.
Me or maybe somebody else over there will do some research in the future.
All right. Speaking of you, sir, it's time. It's time for the aforementioned, your favorite part of the show. It's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
I have pages and pages. How much time?
I've budgeted
How much time do we have?
42 minutes for you, sir. Have at it.
How much time do we have? The activity, regardless of where we are in the calendar, is just getting, it continues to pick up for the weeklies. Going back to Monday, and here's a Monday trade that half of it has already been completed. Somebody sold 182 of the September 20th. Those are standard options. Sold 182 of the September 20th, 13 puts for $1.12. They bought 182 of the August 30 puts, or August 30th, 13 puts for $1.50. That cost them 38 cents. It appears that they held those August 30th, 13 puts through settlement on Wednesday morning, and they were worth 97 cents. So you've now reduced you've gone from a cost of 38 cents to a credit of, God, I'm trying to do math in my head, 59 cents. And you are still, whoever did this trade would still be short the September 30th, 13 puts. If we get VIX above 13, turns out to be a pretty darn nice trade and a well-timed trade. Tuesday, somebody sold the September 13th, 13 puts. They did these in several lots between 89 and 91 cents. And then they bought a bunch of the October 18th 11-strike calls, and they paid between $3.66 and $3.64 for those. So I'm just going to make that a $2.75 cost, being short the 13 puts and long the 11-strike calls. Somebody also on Tuesday, they sold 2,000 of the September 6th 12 puts and bought 2,000 of the September 13th 13 puts. They sold those 12 puts for 29 cents, paid 89 cents for the 13 puts, cost of 60 cents. September 6th settlement above 12. Those options expire with no value. Then if we get another volatility crush, which just seems to be the pattern, as long as the 12 puts expire with no value, as long as we're below 1240 for the September 13th settlement, they'd be in good shape there. Somebody on Tuesday, a lot of weekly activity on Tuesday. Somebody sold 500 of the August 30, and this was less than a 24-hour trade here. Somebody sold the August 30th 12.5 puts for 23 cents, and they bought the August 30th 12 puts for 10 cents. They took in a 13-cent credit. Settlement on August 30th was 1203. So they took in a 13-cent credit, and then they got to deal with a debit of 47 cents. This trade actually lost 34 cents. There's nothing wrong with talking about losing trades.
It's informative. It makes us all feel better, too.
It is. It makes you feel better about the things you didn't do. So no regrets. Somebody bought 290 of the August 30th 9.5 calls for 336 and sold 290 of the September 6th 9.5 calls for 384. That was a cost of 48 cents. They may have been rolling there. I think that
those are interesting strike choices if they're doing that outright.
Well,
that's kind of interesting.
They're doing, basically you're replicating the futures.
Yeah.
So somebody might have had long exposure using the 9.5 calls and they rolled it out to the August 30th. I think that might have been a rolling transaction. Something I don't see an awful lot of, but that's why I want to mention it. A call butterfly using the September 13th options. And it's the 13, 14, and 15 calls. They bought 100 of the 13 calls. They sold 200 of the 14 calls. And they bought 100 of the 15 calls. The net result here is a cost of 12 cents. Looking for VIX around 14. VIX at 14, holding it to expiration. Get a perfect 14 settlement. They make 88 cents off of a 12-cent cost. I assume that they are going to leg around this thing if we get any volatility spike between now and September 13th.
Yeah, it's funny. You're right. I'm trying to think about it. We don't see a lot of flies going up in VIX options for whatever. We see the 1x2s and other kind of lever to the upside ratio spreads, and of course, time spreads. But we don't see a lot of flies for whatever reason.
Yeah, and when we do see flies or anything that uses this structure, it tends to be broken wing one way or another. You don't see a lot of pure. I started to name a prognosticator out there who does nothing but flies, but you don't see a lot of those at all. That's one of the reasons we don't see them in standard, and we definitely don't see them in the weekly. So maybe somebody's trying out something new there. Might be worth keeping an eye out.
Yeah, it seems like everything we see going up in VIX, especially these days, has some sort of bias, and that would go into the broken ring category as well. Everyone's got an axe to grind in VIX land.
Yeah. So let me see. Tuesday was huge. I got one more thing from Tuesday. September 6th, somebody sold 100 of the September 6th 12.5 calls for 94 cents, and they bought 100 of the September 13th 12.5 calls for $1.44, and they paid 50 cents for that. A common theme, I know I'm throwing a bunch of strikes and timing and a bunch of other things out there, but basically whenever I would see a calendar or diagonal type spread, it seemed to be bearish on the 6th and bullish on the 13th. So somebody's looking for something between those two dates. I don't know. And Mark Sebastian, when we were reviewing the week, he noted that the futures tend to be we've got some real steep contango going on. That would kind of match up to the outlook that I saw in a lot of these calendar type spreads. Ratio spread, somebody sold 130 of the September 6 12 calls for 84 cents, and they bought 260 of the 13.5 calls that expire on September 6th for 43 cents each. Net result, a credit of 2 cents. Then also somebody sold the September 6th 11.5 puts for between 23 and 25 cents, and they bought the September 20th, again, that's a standard expiration, 11.5 puts for 30 cents. They paid anywhere between a nickel and 7 cents for that. An interesting call spread. Somebody sold the September 6th 12.5 calls for 77 cents and bought the September 6th 11 calls for $1.31. That's a cost of 54 cents and a break even of $11.54. Anything above 12, and they make 46 cents off of that. A bearish spread going kind of far out. In expiration, probably are surprised as even a weekly, but it is September 1st. Somebody sold the September 27th 30 calls for 18 cents, bought the September 27th 35 calls for a dime. As long as we are under 30, they're good for 8 cents. Yesterday, somebody sold 200 of the September 13th 13 puts for $1.31 and went out and bought the October 13 puts for $1.21. They took in a dime credit. Another interesting spread. Somebody sold the September 13th 11 puts for 20 cents and bought the September 13th 10 puts for 3 cents. They took in a 17-cent credit, and they're okay as long. It's kind of funny to say this. They're okay as long as we're above 11 at expiration. And then finally, Finally, I promise I'm coming to an end here. You're going to stop making fun of me about not filling time.
No, you got another 28 minutes to go. I'm waiting for you, sir.
Somebody bought, this is today, just about an hour ago, somebody going out to October 4th. Yes. What are you dressing as for Halloween? I am going as somebody visiting the flood wearing stilettos. In fact, I need to talk to Mark Sebastian's wife about getting some oversized stilettos.
I'm gonna go as a standard deviation. How about that? Nice volatility theme to the Halloween event.
The final trade, October 4th options. Somebody bought the 17 calls for 85 cents, sold the October 4th 25 calls for 30 cents, paid 55 cents. Looking for a volatility event in September. Go figure.
Maybe it's our friend who wrote that paper saying VIX hitting 60 by Halloween, sir. That's.
I hope they put their money where their mouth is.
Maybe that's them. We shall see. Well done, sir. Not exactly the 42 minutes I allotted you, but still very thorough. If you're always asking yourself, I wish there was a thorough recounting of the legitimate, the interesting, the compelling action in the world of VIX weekly options. There you go. You have it done for you by someday in about 20 years, Mr. Dr. VIX. All right, moving on to the big mothership options. A quieter week than last week. Doesn't mean it was a quiet week. Last week was pretty much rock'em sock'em robots. So coming off that a little bit, that's pretty much inevitable. As we're coming off at non-farms here today, VIX kind of doing light volume, not just about 300,000 contracts on the tape here, a little more than halfway through the session. Now, ADV, though, is getting up there. It's getting 782,000. That may be the highest we've seen it close to. I think it was 785 earlier this week, but that's pretty close to the highest we've seen it in quite some time. So things have been very active out there. Yesterday about 4:30, Wednesday 6:31 this week. Tuesday was the big day this week. Just a tick over 1 million contracts going up on Tuesday. So there were some million contract days this week. And then Monday about 393,000. Russell can breathe a sigh of relief. The open interest out there for put call, only about 3.3. I should say call to put, about 3.3 to 1. So he's getting less nervous. Less nervous by the week. You couldn't hear it there, listeners, but he breathed a big, deep sigh of relief. Go ahead, do it again, sir, so the listeners can hear you. Oh, there we go. I could tell. I know you get very worried about that VIX call put, sir. So I'm glad I could alleviate some. I can see you here sweating in the studio, so I know how nervous you are whenever it hits north of that 3 level. Moving on to the hot VIX options, the hot VIX strikes here for the week. Number 1 with the bullets, taking it back. It's been an interesting tug of war. Seems like there was some closing on our number 2, hence number 1 getting back in the top spot again. These are the OC25s. You'll recall, listeners, this is part of that much talked about, including on this show, that risk reversal that went up about a month ago, 3 weeks ago, something along those lines. I think it was a 12-15 versus the 25s. Well, the 25s are still number 1 with the bullet. 627,000 of those bad boys. As you recall, last week, the SEP 20s had clawed their way to the top spot, had taken the Iron Throne away from the OC 25s. This week, they have been put back in their place. If someone must have closed out about 200,000 contracts because it's down to about 473,000 this week. Still good enough for the number 2 spot here on our hot strikes list. Number 3, the OC 15s, again, part of that size risk reversal, 400,000 open there. Number 4, the first and yes, the only puts on our list, the OC 12 puts. Again, also, that risk reversal just changed the landscape of VIX options, at least out there in October. 384,000 open there. Number 5, the SEP 17, 374,000 contracts open there. Number 6, the OC 20s, a little more reasonable strike there. It's 343,000. Moving on down to, what do we got here? 7, SEP 23s, 335,000. Number 8, the SEP 21s, 286,000. Number 9, the SEP 18s, and right behind it, the SEP 19s for the top 10 spot here, 200, just shy of 250,000 contracts. Total open interest still very strong, about 12 million contracts open, about 9.3 on the calls and about 2.7 on the puts. Mr. Meatball, any other activity out there in the big, could be big VIX, could be weekly VIX, take your pick, that caught your eye this week?
Yeah, we've actually seen a couple of huge weekly trades go up since Russell looked at his computer. Russell, you'll like this one. 53,000 of the September 13th, 21 calls have traded today, 10 cents. So those are flying off the shelves. Now, here would be my question. Why are you buying the 21s for a dime when the offer on the 20s is also a dime? Open interest against only 8,700, so that's opening. And then the other big trade, those aforementioned OC 417s, another 8,700 have traded today, with 6,700 going up for 78 cents, trading between 79 all the way up to 85. So there's a ton of volume there. We saw a big, huge risk reversal trade this week, or not a risk reversal, a big, huge kind of backspread swap trade. A customer came in on August 30th and did the September 15-20 call 1x2, buying one, sell. He buys one, sells two. Paid 8 cents, did it 60,000 by 120,000. So he was a buyer of one, a seller of two. We also saw a big swap trade earlier in the week. The paper customer bought 50,000 of the SEP 15s, sold 150,000 of the SEP 20s, paid 33 cents for that spread, versus he sold 75,000 of the OC 15s and bought 150,000 of the OC 20s, paying 21. Excuse me, he collected on the 1x3. So net kind of took in a little credit on this spread, but that was some crazy, a pretty large trade that would have been one block. That was almost 400,000 contracts. So that might be why we had 1 million contracts on the 29th. But most of the flow I saw was fading September to go long October. That was kind of, call it rolling, call it what you will. But most of the trades I'm seeing are moving positioning to be long in October. And again, we saw October really correlating highly to September in terms of its movement on rallies. So there you have it.
Yeah, so I guess it sounds like you're saying we're back to rolling ratio spread season effectively out here in VIX land, which, as we all know, was the trade du jour for a year and a half out there in VIX land, and it kind of went away for most of 2017, and we've kind of been detailing over the past month or so how it seems to be coming back. So maybe we're back in that regime. I think we're back in that regime, Mr. I almost called you Mr. Meatball. I apologize.
That's okay.
Mr. Someday Dr. VIX.
There's a lot going on here. So, no, the way I was going to say something other than the regime question, so now I'm tongue-tied for a second. So no, really what I was going to say is, doesn't it seem, and it's kind of a question/statement for the marks, doesn't it seem kind of early for the roll to October? It seems that not so, you threw the regime thing out there, and I was thinking that it's more about the timing of what's going on than the types of trades that are going on. I don't really think that seeing more and more long volatility trades, when you got the S&P 500 up like it is this year, when a lot of people didn't expect it, you really shouldn't be surprised that we're getting those types of trades right now. But the timing of those trades, the week before Labor Day instead of the week after, that's the one that's got me scratching my head a little bit.
Yeah, that was the first thing.
Early.
First thing I noted.
Saying October on the rundown,
yeah,
so many times, that was interesting too. I thought it was early for that.
It is. You're right. October, obviously, historically, an active time, or October, as the cliche is often thrown around out there. But still, you're right. It did strike me when I was looking at the numbers for this week and saw some of those big trades going up. It doesn't seem like it's that time yet. Yeah, it's early. I don't know, Mr. Meatball, are you on that train as well? You think people are jumping the gun a little bit here, or are you feeling what they're laying down here?
I think what you're seeing is people taking advantage of the big, huge contango and the fact that we were dealing with some vol pops. And so they're saying, well, boy, I might even be some of these trades. They may be looking and saying, boy, I may be able to get out with a credit or a wash or better with these vol pops and with the in relative terms high September VIX future, and I can roll that back to October. So you may be some people seeing some people strategically doing their hedge early to try and rolling their hedge early to try and milk what they can out of September, salvage a little bit more of the vol premium that's in September. Additionally, if you look at the timing, if there is a debt ceiling issue, you're going to need October options, not September options, in order to kind of fully capture the risk associated with debt ceiling stuff.
And we should talk. We have a million questions about this. We'll talk about it again more. But we should touch on everyone's favorite / least favorite vol product, of course, VXX out there. We talked about the big 4-to-1 reverse split on the show last week. It popped up to the high 40s, still up in that level, about 46 right now, off slightly on the day. Mr. Meatball will continue with our ongoing series of Quiz the Meatball about VXX. If you had to guess right now, top open interest position right now in VXX options. What are you feeling, sir?
The top open interest VXX, it's trading what, 46?
I'll give you a hint. It's more reasonable than you might think. I'll give you that hint.
I'm gonna say it's either the September 50 calls or the September 45 puts. One of those two.
45.
I'm gonna go the 50 calls.
45 puts. These are actually, I don't think these are split adjusted. I'm gonna say the 40 puts then, because you say Sep 10 puts here on my list. So I'm guessing these are not. These would be the 40 puts now. So you were in the ballpark. Well done. See, well done, sir. You get a little bit of the fifth try is the charm.
They love being short VXX, and it's got some juice to it. And the interesting thing is there may actually be a trade, where an arb between, being long VXX versus short the September future or something like that, because there is just that huge bid in September. If you're really looking to harvest time premium, contango premium, going straight into VIX, I think looks more effective than in VXX right now.
Since we're talking VXX, let's just get to it. Let's get to the voicemail, because you guys have a boatload of questions about it. So without further ado, let's check in on the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody. Welcome to the VOD. I just saw your tweet, Russell. You're killing me here. Killing me live on the show with your I'll have to retweet that if we haven't done so.
Multitasker.
You are indeed Russell has always been known for his ability to generate images on the fly during the show. And let's just say he has done so yet again, including with his biggest fan there. I can attest to it. I can see here in studio just how much she's hanging on her dad's every word, which is to say not at all, listeners. There you go. All right, moving on. Before we get into all that VXX talk, let's follow it up. People are just have Mr. Rhodes. They have cheapy calls on the brain this week, because we put this one out there to them on Monday, and they've just been devouring it ever since. We asked you back on Monday, say let's get cheap. If you had to buy a lottery ticket, Dees calls for a nickel in one name, which would you choose? We gave you four popular choices. We gave you the old Amazon and Apples, the two A's and the fangs, as well as Tesla and VIX. And the votes have been pouring in, Mr. Rhodes. It's been fast and furious, hot and heavy. Where do you think our audience is coming down as we're winding into the final 24 hours? First off, what is your vote? Even though I know where your bread is buttered, so I have a feeling I know where you're going. And then B, what do you think our audience is loving up?
What are my choices?
Two fangs, so Apple and Amazon, and then VIX and Tesla.
Oh, Tesla.
You need me to break down which strikes they actually are? Because we did do that work for them.
Oh, my gosh. Tesla 150s? 50 puts?
150. Oh, that's something else, yes.
Yeah.
I'll look for the strikes while you give us your guess.
I was trying to give you my guess. So I'm guessing on Tesla. And what am I trying to guess on?
Which
This is what happens when I multitask.
You're an excellent multitasker. If you had right now,
usually I cheat,
and you do cheat. Yes,
and I'm not cheating right now. So
I'm
I need you to
over you right now. That's the downside of being in studio. I can stem your cheating. But that said, if you had to buy, just think of it this way: if you had to buy nickel calls, either of these names in December, so it could be VIX, could be Tesla, could be Amazon, could be Apple. which of these four, I'll get you the strikes in a second, but even without the strikes, just think wherever the nickels are, which has the highest probability, somewhere in that 5 delta call range?
I'd go with Apple because they've got the iPhone 8 coming out shortly. They're going to have enough time to work some kinks out of it going into Christmas. When initially I thought I could do a put or a call, that's why I was saying Tesla, because I was thinking nickel puts, but nickel calls I would definitely, and in December, just because of the seasonality thing that we deal with, I wouldn't want to be involved in VIX.
Interesting choices.
I'd go with Apple because
Apple.
Maybe Amazon because of Christmas season, but I'd probably go with Apple instead.
Interesting choices. Uncle Mike, I think, was feeling what you were laying down yesterday on the option block as well. I'll run down those strikes again for you. Yes, a lot of you guys asked what were the strikes. We did the homework. You guys are lazy, so we did it for you. For VIX, it'd be the D70s. For Apple, it would be the D's 235s. For Amazon, you can't really get there with listed D's options. The closest you can get are the D's 1420s. They're about a dime bid, so let's just pretend those are nickel for the sake of argument here. So let's just say D's 1420s. And then Tesla, you got to go all the way up to D's 610. So put all that in mind, listeners, as your guess. And Mark, you've had a few bites at the apple here. Have you changed your thought process here at all? Or are you still buying good old VIX?
Yeah, well, like I said, I think that those VIX calls would be the easiest ones to make money on. There's no way that they settle in the money, but they would be the easiest ones to make money on. I mean, I just don't see Apple getting to $240 by December. That would be incredible. There's no way those VIX ones end up at the money, but if we got a VIX pump to 30, those would easily be worth a quarter, and then you've got something, right? So those would be it just kind of depends on what your view is. Now, your question is which one is most likely to end up in the money? I'm going to go with Amazon, just because or maybe Tesla. I'm going to go with Tesla, and I'll tell you why. Tesla investors, there is no rhyme or reason. They don't care, and Tesla is the new Apple circa several years ago, minus the actual profitable product.
Minus the actual engine of profit underneath it. Yes.
Exactly. So, because there's no rhyme or reason, maybe Elon Musk comes out and says, oh, yeah, we're going to deliver 1 million cars next year. And everyone goes, oh, of course they are, because Elon Musk said they're going to. And then, he says, oh, in 2019, we're going to deliver 10 million cars. And everyone goes, well, if Elon Musk says it, it must be true. And then they run Tesla up to 620. I could see that. There's an investor in Tesla that's stupid.
Yeah, that's true. There are, shall we say, some eccentric Tesla bulls, and leave it out there. They're giving the gold bugs a run for their money these days. Speaking of which, it's funny, since we talked about this on the Option Block show yesterday. Since then, a ton more votes have poured in, even since that show, and yet the breakdown is almost identical since it was last night. So the numbers, everyone has voted in the exact same proportions as they did going into yesterday's show, which is still number one, right exactly at 40% pretty much, is the VIX. Everyone loving themselves some VIX still. Actually, they moved the Amazon number 2 now. It was tied with Apple before. Amazon right about 24%, so right about almost a quarter. 19% now for Apple, so Apple coming on down a little bit. And Tesla still the laggard, only 17%. I don't think that one has moved, actually. So interesting to see how this is breaking down. If you haven't played, listeners, I know a lot of you already have. If you haven't played yet, you got about 24 hours left. Get out there, add options, make your voices heard, just so you can undo the damage that Mr. Dr. VIX has done over there.
No, I was raising my hand. One of the things I want to point out to the people that voted for VIX, if VIX doubles, and I know, what is that, buying the 70 calls or something silly like that?
Yes.
But if VIX, if VIX goes to 70 tomorrow, which Saturday, so we know that I'm not making a prediction there, the December futures ain't going to 70. So buying keep in mind,
it's a good guess. The calls will be worth more than a nickel, though.
Yeah,
I think you're okay. I think you're okay there.
Some, but just keep in mind that whereas if Apple knocks the cover off the ball next week with the new iPhone 8 and the stock goes up 30 or 40%, the nickel calls will act a little bit better. This is a learning opportunity, a teaching moment.
There you go, a teaching moment
about how VIX behaves when you go that far out.
Yeah, it is all sorts of wonky.
I'm trying to go with that.
when you get out there. But I'd feel comfortable. I'd get at least my nickel back Mark Sebastian's favorite band. How did I know that? Nickelback. Invoked here on the show. A man of endlessly evolving tastes, Mr. Mark Sebastian. All right. Speaking of tastes, you guys have various tastes on our thoughts here on these names. Jack Bry chiming in saying he'd rather buy a Powerball ticket than buying these way out of the money options on any of those names. Well, I could see how you might feel. I think your odds are slightly better here.
He can send me a nickel, and I'll tell him that he lost.
Oh,
either way.
Would you then give him his nickel back?
No.
Oh, that's Mark
Sebastian's job.
That's true. All right. And Traders99 chiming in saying all of these are impossible. Quite probably, I should say, you are correct, sir. That's what makes it fun. Let's see. Moving on. Okay, I mentioned VXX before. You guys got a mountain of questions on our show last week from VXX. We'll see if we can get some of them. Let's start off with a common refrain we got from a bunch of people, including our friend here, JC. He says, "What am I missing? What am I missing? If VXX erodes, why does anyone buy it?" A lot of people ask this question. I guess let's go to Mr. Dr. VIX, because you love talking all things VIX, ETPs. If VXX erodes, Mr. Rhodes, why the heck does anybody buy it?
Because it's had a handful of weeks where it's been up between 20 and 50% in the past. So it's the same mentality that you have. Why do people buy out of the money calls and buy out of the money puts? Because they're expecting some sort of really large move. And if you don't get the large move or a large enough move or a large enough move quick enough, you experience some sort of time decay on those out of the money calls and out of the money puts. It's the same thing with VXX. If you don't get the volatility event that you're hoping for, then you're probably going to end up experiencing some. We got to come up with a one-word decay, like VXX decay or something like. But that's what it.
That would be two words, but yes.
I know, that's what I'm saying. Time decay you can say very quickly in one phrase. VXX decay doesn't. Vol ETP decay doesn't sound
none
right.
of those roll off the tongue.
I know, so I'll
dubious VXX erosion. How about that?
I'm going into the deep meditation room at the new Rhodes Manor out in Clarendon Hills, and I will come out with something by next week.
Let's have another deep debate about what causes the erosion in VXX. Let's do that right now, because we can easily fill 2 hours.
VXX is bad.
And we have done so. There we go. There we go. I think what you guys call it over there in option pit land, predictably crappy. Similar question here from Simyan. A lot of people maybe got a wrong perception, maybe listening to our show last week. He says, so should I just short VXX into the dust? Is that the deal? Over time, as you pointed out last week, over time, if time is on your side, VXX does go down. It does erode. That's kind of a function of the product. But that said, doesn't mean it can't have blips up to the upside in the interim. And in fact, it does. It's a tradable product. It's going to go up and down. And so the notion that you could just come in and, as Simyan says, just blow the heck out of this thing, shorting it to death, that could be a quick road to ruin, because it does go up. It's not like it just inevitably ticks down every day. So if you came away from our show with that impression last week, I apologize for misleading you. But that said, this thing does go. I mean, Mark, you guys talk about VXX in your chat room probably on a daily basis almost over there. It's not exactly a beast. You can just come in, sell 1 million shares of it, and then walk away and come back a year later and be fine.
No. So the thing to remember is that in the immediate, VXX path dependency is based on VIX and VIX futures. In the long term, it's based on the shape of the VIX curve. So, if I think vol is going to pop today or tomorrow, VXX not tomorrow or Tuesday, VXX is an excellent tool to get long volatility exposure. However, again, over the long haul, if I'm just buying and holding it and I'm not using it strategically, then over time it will decay. Now, in terms of shorting into oblivion, the problem is that on one of those vol spikes, it can move incredibly hard, and if your timing is ill, you may experience a beautiful, lovely thing called a short squeeze or a margin call. And so we do not tell people to just go in and short the stock. There are some cool strategic things that can be done using put options or call spreads, but generally speaking, that's kind of the key. Is the near-term path dependency is VIX. It is not just this endless death. It has its it's kind of, you ever seen, you remember back in the old days, the sleeper hold?
Who could
Mark?
forget?
Like the guy puts a sleeper hold and then like he looks like he's dying. Then his arms go up and he starts fighting again.
Are you invoking WWF here for the second time in a row?
Yes, I am. And then he goes back to sleep.
Is this the Hulk Hogan finger in the air, I'm not done yet kind of thing?
Exactly. So that's kind of the way. That's kind of the way it works.
It's actually a good analogy for VXX. I like it. The finger's up. Oh no, I'm short $1 million of it. Get it out. Cancel.
It's an ETF trapped in the $1 million dream.
VXX equals Hulk Hogan. I can see the headlines now. Mr. Rhodes, any thoughts on this, or do you have your own wrestling analogy to share with us?
Well, I am much more of a Roddy Piper guy, and am often seen wearing my kilt on the weekends. I'm
Ultimate Warrior myself, but to each their own.
Okay. Well, and you put on the makeup, I wear the skirt. It's all good. Each to his own on the weekends. VXX, it's been around since the second to last day of January 2009. We've got the numbers going back to 2006. In October of 2008, it was up 113%. So that's what Mark Sebastian's talking about, and that's the kind of thing that can happen to you. As far as being short into oblivion, Ophir was on here a few weeks ago with us, and he has a consistent way of selling call spreads against VXX that expire every week. I love that strategy. I think that's one of the smartest methods of staying short vol without having body parts handed to you or being put in a permanent sleeper hold.
Permanent sleeper hold. I like
permanent
that.
Sleeper hold.
We did share that with the masses, Mr.
It's the man who puts you in the sleeper hold's responsibility to wake you back up.
If he's responsible,
it's not VXX's responsibility.
If it's a street fight, it's anything goes. VXX listeners is a street fight. It will not wake you up. We got a bunch more here on VX. Let's see how many more we can get to.
We could do a whole show.
We could do a whole show on what the heck is wrong with VXX. That could be the title of it. Nils, I like that. Nils wants to know. So, if the max length between splits is 3 years, and the minimum split price is $10, aren't the Jan 2019 20 puts for $2 a screaming deal? Well, some misperceptions there, Mr. Nils. First off, according to Barclays, they can reverse split at any time after it goes below $25, not 10. So it could literally historically, it's shown us they tend to do it around 10. Most of those splits we broke down in the last show, they reversed it when it got to around that $10 range. So that's a pretty safe bet. They'll keep doing that, but it can technically do it any time below 25. I don't see them doing it around 25. Doesn't make much sense, but $10, it makes sense because at 25, you're getting back up to 100. So it's got to be a 4-to-1 split. So 10 makes a lot more sense. And also what do you have? Minimum. The maximum length is 3 years. Again, there's nothing in the rule book that says it has to be 3 years. It just happens to work out so far. It's split about 4 or 5 times, I believe. And the max length we've seen so far in that is about 3 years, almost exactly. That said, past is not always prologue. They could do it shorter. They have done it as soon as almost as less than a year, or they could do it a lot longer. I think we all agreed last show, given what we saw in the VIX futures, which is an evolving prospect, but given what we saw last week, it seemed like it's going to be a little bit on the longer end of the spectrum this time. That said, puts. Long-term puts, we've said many times, long-term puts in VXX tend to be one of the, if not a set it and forget it, one of the closest things you can get in the marketplace. You can buy long-term out-of-the-money puts in VXX, kind of put them in your IRA, and forget about them for about a year or so and go check on them, and they'll probably be doing all right. It's one of the closest things you can get out there in the space to a quote-unquote set it and forget it type trade. I don't know, Mr. Meatball, you liking these Jan 2019 20 puts for $2? You're going to load up on them like our friend Nils says here for Carmen Line?
Well, here's what I'll say is 1,700 of those were bought a few days ago. So somebody likes his idea.
Maybe Nils slings some size. We don't know.
Yeah, on the 25th, somebody bought 1,700 of those. So, and like I said, every time VXX kind of reverse splits, it feels like there is a lengthening of the time between splits. And with the term structure where it is, who knows how long it'll be for this thing to get back to 20. And if we have a big vol event, it could be a very, very long time. I mean, you could be throwing good money after bad. Now, that said, is that a terrible idea? It's not a terrible idea. I will agree there.
We have other people chiming in on our VXX poll. Steve Place listening, I guess, to the show, and he just wrote in on our poll question. He wants to sub in for his lottery ticket choice VXX. He wants to buy nickel D's calls in VXX. I'm not sure I'm feeling that one. Nickel calls. That's why we didn't put it in the poll. So I probably would go VIX before I go VXX. But again,
I'd go VXX before
VIX. You go VXX because you like
the
futures.
Because you would get the you possibly get the kind of reaction that you're hoping for, even if you got the move earlier than when December's the front month. Did I say that right?
I guess it's a battle between the inevitable downward inertia of VXX versus, like you said before, the VIX. The future is not exactly playing ball. Which is going to hurt you more in that scenario, I guess, is the question. I think Mark's reasoning the other day about the nickel could at least probably double in the VIX calls. I'm on board with that. Let's see. What's we got time for? What we got? We're running long. Just go real quick. TimTim wants to know, do any other vol products exhibit this erosion? Yes, many of them. Many ETFs that try to replicate some sort of underlying using baskets of futures run into this similar problem. Again, we've debated many times on the show what exactly causes that erosion. A lot of it is the contango buying expensive vol, selling cheap vol. Others will chime in with other reasons why exactly. Bill Valentine has done. Others on this show have weighed in. Listeners have weighed in with exhaustive reasons for exactly why that erosion occurs. But ballpark, it's that sort of contango, and that exists in a lot of other products, not just limited to vol space. It's in commodity ETPs and ETFs. A lot of products out there that attempt to replicate the underlying without actually holding the physical, like GLD, for example. They tend to encounter that issue. So yes, it is not unique to VXX. VXX is just one of the biggest, so it gets a lot of the spotlight. But a lot of products have that problem. It could not be a problem depending on your viewpoint. I know Jared Woodard used to argue all the time that was not a problem of VXX. So again, to each their own. All right, we got to keep on rolling to our final segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Having fun here in the interim here in the old studio. Russell's daughter is loving it. She's loving the show, listeners. She's just deeply engrossed. That said, let's move on to what we're predicting. Last week, it was a challenge. We were all trying to wrestle with where this VIX pig would land. We were leaning lower. I let you two guys have my bottom, so I went to the top. I went to 1175. Mr. Erodes was the lowest, 1080. And Mr. Meatball right in the middle, Goldilocks right about 11. As we're closing out right now, right about 1010 in the old VIX Cash, so about 7/10 of a handle off, but not bad. I'll give it to him. I'll give it to him, Mr. Meat. It's one of the few times one of the few times you went low and actually won. So I gotta give it to you on that, if for nothing else. So you get the pride of place of going first, or do you want someone else to do that job for you? Mark Sebastian has to go first. All right, so going first has its you get to clear out the strikes you want. So that's it. Mr. Meatball, go forth, sir. What do you got?
1065.
Wow, you came prepared this week.
Didn't you just say that VIX would be at 11 come Tuesday?
Yeah, and then it'll be 1065.
1065 by Friday. He's just baking in that inevitable erosion. Yes. He's just looking at it like VXX. 1065. All right, I'm laughing too hard. You go, Mr. Russell.
I'm going 11. Just because we're at 1010.
11.
You know, the other morning we were in the pre-market. We were down 11 cents to 11.11.
There you go.
And you know what that tells us?
What is that? Absolutely nothing.
Not a darn thing.
All right, and last one. So we got what do we got here? We got 11.11. We've got 1065. I'm not feeling a lot of the little bit of juice you guys are. Of course, the traders out there are. We're seeing a lot of paper to the effect. I'm going to buck the trend. I'm going to say, actually, I don't know if we're going to be in single digits either. I'm going to say pretty smack dab close to where we are right now. I'm wrestling between 1015 and 1025. I'm going to go 1015 to give a little bit more breathing room to the upside there to everybody else. So there we go. 1015, so pretty much almost unched to where we are right now. For me, 1065 for the Meatball, even though he thinks it'll be higher earlier in the week and then slowly come down the track. And then last but not least, Mr. Rhodes inevitably picking up the top there with his 11-11 prediction. There we go. Got to have the music to close out. the show, listeners. Otherwise, it's just no fun. Thank you for joining us for another fun journey. At least we hope it was fun. We certainly had fun bringing it to you. I hope you liked it. Another fun journey through the world of all things volatility. But before we wrap up for this week, we want to go back around the horn one more time. Let's start with Mr. Meatball. What is cooking in all things Carmen line and option pit, sir?
We've got I did a webinar last night on trading options after earnings. You can go to optionpick.com/direction to check it out. We're also doing our next live class. We're going to do professional approaches to directional option trading. You can go to, again, optionpick.com/direction to view the webinar and to see all the details on the upcoming educational seminar.
So was your prognosis just buy straddles after earnings? Is that pretty much it?
Correct. Can't lose.
Exactly. Home run. Check it out. Go to his Buying Straddles After Earnings webinar. Yourself, listeners, over there, optionpit.com, to learn more. Mr. Rhodes is chuckling. I like that. Mr. Rhodes, what's cooking in the land of all things CBOE, perhaps even on said CBOE blog?
I'm still on blog sabbatical. I did a white paper, but I'm on blog sabbatical.
Tell us about your white paper then.
We talked about my white paper earlier. How about I just talk about how excited I am to be involved in Mark Sebastian's class that's coming up toward the end of September. It is a star-studded lineup of individuals to discuss professional approaches to options.
There you go. I think it is September 21st, is it not, Mr. Meatball?
God, I hope not, because I'm in Tel Aviv.
Oh, I thought it was September 24th.
No, it's the week after. It's the
week
last
after?
week. It's like the 27th
Head on
or the
over
29th.
optionpit.com. We'll put the link in our show notes too, listeners. So you too can participate. If you're going to be local, if you're going to be in town that day, come check out Mr. Rhodes, myself, the Meatball, a bunch of others, some guy wearing a cow jacket, all sorts of fun stuff. And you too. Maybe you can get a tour of the CBOE if you are so inclined. Fun stuff. And on behalf of the Meatball and someday Dr. VIX and myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, all the fun stuff that you do, including sending such great questions. Keep those coming. And we'll see you next week for more Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.